Global investment banking. Global investment banking revenue increased to the 5th year running in 2007 to a recorded $84.3 billion US, which was up to 22% on the previous year and more than double the level in 2003. The United States was the primary source of investment banking income in 2007, the 53% of the total, a proportion which was fallen somewhat during the past decade. Europe, with Middle East and Africa, generated 33% of the total, slightly up on its 30% share a decade ago. Asian countries generated the remaining 15%. Over the past decade, fee income from the US increased by 80%. This compares with a 217% increase in Europe and 250% increase in Asia during this period. The industry is heavily concentrated in a small number of major financial centers, including London, New York City, Hong Kong, and Tokyo. Different departments within investment banks: finance, compliance, investment research, human resource, also known as human capital management, investment banking, investment management, legal and management controls, merchant banking, private equity, operations, securities and trading, services, technology, information risk management, and IT, investment banking services, private equity, PE syndication, mergers and acquisitions, M&A advisory, debt syndication, initial public offering, IPO, other service offerings, valuation services, capital restructuring advisory, ESOP valuation, buybacks, delisting, QIPs, divestitures and spin-offs, compensation and salary surveys, compensation and salary surveys for employees working in investment banking and securities dealing. This information can be used to assess which positions are most common. Please view the following table carefully. SWOT analysis. Please view the following chart carefully. PEST analysis of India investment banking industry. Please view the following diagram carefully. Future of M&A in Indian banking industry. Further opening up of the Indian banking sector is forecast to occur due to the changing regulatory environment. Proposal for up to 74% ownership by foreign banks in Indian banks. This will be an opportunity for foreign banks to enter the Indian markets, as with the huge capital reserves, cutting-edge technology, best international practice and skilled personnel, they have a clear competitive advantage over Indian banks. Persistent growth in Indian corporate sector and other segments provide further motives for M&As. A bigger player can afford to invest in required technology. Consolidation with global players can give the benefit of global opportunities in funds mobilization, credit dispersal, investments and rendering of financial services. Consolidation can also lower intermediation cost and increase reach to underserved segments.